Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Petersen.
All right, we are back with another episode of the Real Estate Investing Club. How are you guys? I hope you're having a good week, good day, good whatever day it is for you, or whatever day you're listening to this on. It's always Friday here on the podcast, so we're bringing that Friday energy to you. And we got a unique guest on the show with us. It's Eugene Gershman. He is in the development space. So any of you guys out there who are interested in starting ground up, brand new development, this is the episode to be listening to. Eugene has a ton of experience with GIS companies, and I'm sure he's going to give us some good advice going forward. So Eugene, I'm excited to have you on. Thanks for hopping on.
Gabe, thank you. Pleasure being here.
Absolutely. I told you before we got on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Absolutely. Yeah. So I grew up in a construction company, a construction family. My father owned a construction company. He was a GC, and I never wanted to be a builder. And so even though I've been around his projects, around his office all the time growing up, it always felt like he's always stressed out. He's always angry, and he was always dealing with problems. And so I'm like, whatever, that's your thing. I'm not going to do it. And so I graduated. I got my degree in economics, and I went to work with a small investment firm running retirement projections for old folks. Got bored within a couple of years, said, well, the hell with it. I'm still young, so I'm going to go get my MBA, which was one of the bad decisions. I wouldn't say worse, but one of the bad decisions to do an MBA that early in life. I had zero experience of actually working, and everybody, like all of my peers, were at least 10 years older than me. And only now, 20 some years later, I understand why. But I went back to school, got my MBA. My last year of MBA, my dad calls me and he's like, listen, quit screwing around. I need some good people in the company. He was looking to expand, and I'm giving you a short version of the story. He was looking to expand. He had an opportunity to partner with developers to invest part of his contractor's fee, invest some cash, and become a joint venture partner on a development project. And so that was my first introduction to the industry. So I literally got thrown into the deep end. Thank God he didn't let me run the company. But I basically had to figure it out. I knew all the business theory because I just finished my MBA. I was always good with numbers and Excel. And that's how I got started in the industry. Eventually, we shut down our construction company and went full on, 100% into real estate development. But yeah, that's how it started for me. Nice.
So kind of a family business for you. I like that. I've always, whenever people come on the show and they have, their dad was a contractor or an investor or whatever, it's always, I'm a little jealous because you got that background. Gives you a good leg up. But so I have to ask, we were talking before the show, you are one of the very few guests that's in the Seattle area. So did you go to UW? Was that either your undergrad or your grad degree?
Both. Yep.
Nice. Yeah, go Dogs. I went there too. So you didn't want to, you did building, you got into that space for a little bit, but you knew that was not for you. You wanted to do development. Not a lot of people understand the separation between the two, between, going out there, hiring a crew, putting walls up, and then actually just setting up the deal. So kind of explain the difference between being a builder and being a developer.
Right. So there's a lot of confusion, and especially in a residential single family space, because a lot of people use the term builder. And I always like to make a distinction. There is a general contractor and there is a developer. And a lot of times in single family market, the developer and contractor are the same person or the same company. And so that's what's typically referred to as cumulatively as builder. And, some of the large developers like Toll Brothers, they are both developers and contractors, and so they're referred to as builders. In a commercial space, there's more of a distinction. Not a lot of commercial developers also perform their own construction work. And so that's the distinction. Developer is the entity, the company that runs the process, that manages the development process, that ultimately takes the biggest risk by guaranteeing the loan, by posting bonds. A lot of times, bonds could be pushed onto a contractor, but that is where the risk usually sits, and that's where the profits usually sit. And then the developer typically hires engineers, architects, general contractor, and manages the work of those entities. So that's the primary distinction.
Yep, makes sense. So, developer, from your perspective, you're finding the deal, you're finding the land, you're coming up with the concept of what's going to be going there. You're going out there, you're doing permitting, you're getting the loan to finance the deal. You're finding the actual builder, the contractor, who's going to be actually putting the walls up, and then you're running the deal once it's completed. Correct?
Right. Exactly.
Nice. So, for people who like this concept, they like the idea of it. What are the first few steps that you take to actually get in? And then what are the big hurdles that you run into once you get your feet in the door?
So this is exactly what I'm trying to educate most landowners that I partner with. So in my business, we partner with landowners to help them develop properties. And I see landowners kind of divided into two camps. One camp thinks the development is super easy. You just hire an architect, you hire a contractor, and you get it done. And then another camp that thinks it's so complicated that they would rather figure out how to launch a space shuttle than try to go through the development process because there's so much risk involved. And so I'm trying to bridge that gap. So the first thing you got to do is you have to do a very detailed feasibility study. And we actually developed a feasibility study checklist, which we posted on our website as a free download, that goes through the steps. But you have to analyze the market. You have to figure out what product fits best. You have to estimate the cost to design, engineer, and permit. You have to estimate the cost of hooking up utilities. You have to estimate the cost of construction. And then you need to figure out how much you can sell it for or lease it up for, and figure out what your exit strategy is. So all of these things have to be done as much detail as possible before you get to actually do the deal.
Yeah. And you were mentioning like the new strategy that you guys are implementing is you are partnering with landowners, which I feel like that's something that not a lot of people understand is an option. If you own land out there and you partner with a developer to add value to the land, go into a little bit about the strategy, how it works for both parties.
Yeah, so the strategy is really simple. If you have a piece of land and you would like to see developed, then we could put together a joint venture, and this deal could have multiple different shapes. We had some owners who want to take as passive role as possible. In fact, one owner said, we don't even want to be a general partner or co-developer. We are happy to be a limited partner, an LP, like any of your other investors, and you run the deal. Here's the land they contributed into the LLC, get converted to an LP position, and just watch us work. And then we had other owners who want to be active, who want to sit in every meeting, want to be involved in all the decisions, and we welcome that as well. But essentially, that's how it works. Typically, we'd like to get involved as early as possible before any plans are drawn up. Candidly, we frequently get phone calls when owners already started going down the path of development. They may already have their plans submitted for permits, and then they realize that it's more complicated than they thought, or they cannot get the financing that they needed. They can't attract additional equity. Their lender wouldn't give them the loan because they don't have enough experience. And so that's when they call us, and we get involved at that stage.
Yeah. And I feel like, like I said, not a lot of people understand that is an option. If people have land, or like myself, I market for land, I buy land. Usually people think that the only option is to sell it at market price on the market. But you can actually make more money from that land by partnering with somebody like yourself. You put $500,000 of equity of land value into the deal, but that is just that's the amount that you're putting in. And then once it's actually completed, that's going to be a greater multiple because it's, you've seen the project through. So, yeah, that makes a lot of sense to me. And you guys are strictly residential, correct? You guys you don't do commercial or anything like that. You guys like to build multifamily apartments, single family, that kind of stuff?
Pretty much, yeah. The way I describe it is if people live there, then I would do it. We've gone down the early development stages for hospitality projects that also had residential components. I don't claim to be an expert in hospitality development, but I've never done offices. I've never done industrial projects. I like to say I know enough to be dangerous, but our expertise is mostly with residential, multifamily, single family.
Yeah, makes sense. And so what is the timeline usually on development? I mean, that's the one thing that I've peeked my head into the idea of developing, but I feel like it's a lot. You need to know a lot more than I know. And it's just, I'm going to stick to what I know and get good at that. But also the turnaround time to get one of these projects done is extremely long. So generally from, first contact with the owner to selling the project on the back end, what is the timeline usually?
7 years.
7 years. Oh, wow.
I mean, I'm being extra conservative here, but development is a long game. Yeah. For us to make a deal with the owner, I wouldn't want to sign anything, I don't know, for at least 6 to 9 months of our first introduction. And the reason being, if we are going to be partners for several years, we have to be sure that we like each other, that we have similar values, that we want to go into this process, that I want to make sure that the owner understands the risks involved before they sign on the dotted line. That takes time. That relationship building takes time. So I would not want to, even if somebody came to me super hot, ready to do the deal tomorrow, I would try to slow them down and make sure that they understand what they're doing, make sure they understand what the implications are. Now, having said that, once the deal is signed, if it's depending on the size of the project, if it's a single family infill, that could be done in a couple of years. We could start with a stock set of plans. We could get the permit, probably depending on the municipality, 3 to 6 months, and we could get it built in a year. So that takes about 2 years. If we're talking about a commercial project anywhere in the West Coast, in a large metropolitan area, that's going to take at least 2 years to get it permitted.
It's so crazy.
It is what
I've heard people say, 2 to 3 years, especially here in Washington and like in Seattle. And it just blows my mind that, developers are even able to plan for it, because in 2 to 3 years, a lot can happen.
Oh yeah.
And so if it takes that long just to get a permit, you're not even breaking ground. That, I don't know, that's crazy. That is a problem that needs to be fixed.
Right. Well, and that's why I'm saying it's a long game. And, it's not always a bad thing, because it does allow you to go into many details of your project that you otherwise wouldn't have thought. I mean, I've seen so many plans, permit plans being submitted to municipalities that are not even half-baked. They are enough. They're enough to get the permit, but a lot of the details of those plans are not worked out. And it takes time for the design and engineering team to work out all of the little details of that plan. And so, a lot of times the cities push back and they make you redo a bunch of things. And a lot of times, unfortunately, architects and engineers don't read the code very carefully, and they make wrong assumptions, and then the city catches them and they push back because they've made some wrong assumptions based on the code. And a lot of times, frankly, the cities just interpret the code to their advantage, because there's a lot of gray areas in the code. And unfortunately, a lot of city reviewers, plan reviewers, are so busy with workload, and they're so understaffed that their natural reaction is, if they see anything out of ordinary in your set of plans, they just push it back. Instead of trying to work with you to solve the problem, they're like, nope, this is wrong, send it back. And then you fix that one problem, you resubmit it, and then they start going down, and then they see something else. So
yeah, that makes sense.
I mean, I feel for them. I get it. And many municipalities are now outsourcing their review to private engineering firms, which helps sometimes because engineers between themselves, they could work out a lot of issues. But it is what it is. It takes time. It also helps us to get that time to work out all the details, to work with a contractor to make sure that all the I's are dotted and T's are crossed. But yeah, it takes time.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. I feel like anything that is so heavy on analysis and review is kind of ripe for AI. Do you guys have have you guys used a lot of AI tools to help in the process? Or tell me a little bit about that.
I personally, yes. I use AI a lot, and in our company, we use AI a lot to analyze the code, to analyze feasibility. I haven't seen it used too much on the municipality side. I have read in the paper recently that I think City of Seattle is now introducing some form of AI review of plans. I haven't yet experienced it, so we're working on one project right now. It's in early stages, so hopefully in the next couple of months I'd be able to comment on that. But definitely, I'm excited about all the things that it could do because there's so much repetitive work. In plans. Contract
review. I mean, AI, at least for me, just to get a general understanding of a contract, if there's anything I should be aware of, AI has it's cut the time down in a tenth of what I used to do. And so there's a lot of opportunity, especially for stuff like this, a timeline that takes 2 to 3 years. I'm sure that can be cut down if you put a little automation into it. And so hopefully that is the case later on.
For sure. Yeah. Well, just the other day, we were trying to argue a point with the city, and that's what I had to do. I fed in the entire land use code I used two tools. I used ChatGPT and Grok to compare the results. And I said, here's what I want. Here's the code. Give me your interpretation. It gave me interpretation, and they were different, by the way, between the two tools. And then I said, okay, well, here's what I want. So now use the same information, same background information, but make an argument for what I want. And then it wrote out this entire argument arguing my case, which we then, you have to edit it. It's never correct.
Yeah, it's not perfect.
Right. It's not perfect, not yet anyway. But then we use that to send it to the city. Here's our argument using the code references, and we'll see what they say.
Nice. Yeah. A lot of opportunity there. So we'll see where it goes. When it comes to the land itself, you've mentioned you do infill, so individual houses that you're building. You also do multifamily. Is there anything specific that you guys generally look for in the land? Do you want it a certain distance from the city center? Do you want a certain size, that kind of thing?
Well, because our model is to partner with landowners, it works a little bit backwards. We're not searching out the perfect sites. We are waiting for the owners to come to us with their deals. And it just so happens that people come to us with properties that are difficult. In many cases, they try to sell them to builders, developers. They couldn't sell them, or they couldn't get the price that they wanted. And then they came to us. They said, hey, we can't, this doesn't sell. What can we do there? And then we start looking at it, and we find wetlands, we find steep slopes, we find all sorts of complications. And I understand why a lot of builders don't want to buy them. So that's what comes to our table, to our attention most frequently. And then we start analyzing and see what can be done. But as far as the specific niche type, recent lately we have been focused a lot on smaller unit sizes. Construction costs are rising rapidly. Real estate prices are not catching up to construction costs yet. In just the balanced market right now, construction cost is higher than the cost of the price of real estate, whether it's rental or for sale. And so our focus has been on building small, where cost per square foot is still high, but at least the total value of the finished product is going to be more or less attainable.
Yeah. Yeah, construction costs. We actually bought a self-storage facility. It was basically like, it was a pretty large plot. It was downtown Indianapolis, but only half of it was built. It already had the designs and everything, and we were going to buy it and then build it. And luckily, it cash flowed on purchase, so it's still a good deal. But construction costs went so high that it got to the point where it's like it doesn't even make sense to build at this point. And so we're hoping construction costs come down. I don't know when that's going to happen. I'm sure tariffs have had an impact on that at some point as well. So yeah, I have no idea what's going to happen there.
Yeah, I've got a surprise for you. Construction costs are not going to come down.
Dang. It's kind of expected though.
No, I think the best bet is for the real estate values to catch up, but I don't see construction costs coming down. Tariffs aside, it's just inflation is still there, and labor costs isn't coming down. Our minimum wages are only climbing. With immigration crackdown, there's going to be less and less, illegal workforce out there, and so labor force isn't going to come down. It's going to go up in price. Materials, maybe a little bit, but I honestly don't see that happening. Even if we had no tariffs, inflation isn't going anywhere. Your cost of appliances, your cost of basic raw materials are still going to continue climbing, or if nothing else, just stay stagnant. The only thing that we see contracting in the last couple of years is subcontractor profits, because those guys, because there is not a lot of work. 3 years ago, to get a sub, they would budget something like 25% or more profit margin. Today, they might be willing to work for 5%. Just to keep their crews
lights on,
because there's not a lot of work right now. So that's where we see the contraction. But that's super temporary.
Yeah. Interesting. All right. Well, hey, I just took a peek at the clock. It looks like we have run it down, so it's time to jump into the quick question round. Are you ready?
Sounds good. Let's go.
Let's do it. Starts with education. It could be any form. Could be a conference you've gone to, a mentorship program you've been a part of, book you've read, movie you've seen. Could be anything. Just 2 recommendations, one for general life wisdom and then one for real estate.
I've been a member of Vistage, which is like a mentorship program for executives, and it's been super helpful. It's a small cohort group where you get to share your issues, your problems with your peers, and help each other out, help solve problems. Super helpful. I would highly recommend it.
Nice. What was that again?
It's called Vistage.
Vistage. Okay. Yeah, I always like good call outs for mentorship programs, because I do feel like that is the biggest single thing you can do to accelerate your career is get into some kind of peer group where people are at your level or one step ahead of you. It is, it's crazy how much of an impact that has. So good recommendation.
Especially when you're an executive. It's always difficult to find somebody to talk to, because you're sort of at the top of this hill, and everybody else in the company and around you is below you. So this helps you talk to your peers and help solve problems.
Nice. I like it. All right. Next question is for your younger self. Let's go back to the Eugene who was just watching his dad swing that hammer and getting angry at it. Go back to him, look him in the eye, give him one piece of advice moving forward.
The biggest piece of advice that I would give my younger self is figure out how to fundraise, learn how to market, and remember that there is a ton of cash out there, but you cannot expect that it'll come to you. You have to go and look for it. That was probably the biggest challenge that I've had because I grew up in a family that already earned some money, and the projects that we did early on were the ones that we invested ourselves in. So I never really had to worry about it. And the reality is you need to work with investors. You need to figure out how to fundraise so that you could do deals in the future so that you could grow. Otherwise, you're just staying stagnant. And that was one thing that I only learned very recently. And I wish I was told that 20 years ago so that I could start focusing on that and start building that pipeline.
Interesting. You're episode 500 and I don't know, 82 or something like that. And you're the first person to say fundraising for that question. So unique. And I feel like it's very important, especially in real estate, because you will run out of your own capital very quickly. And at that point, it's difficult to do deals without any money. I'll tell you that much. People always say you can get people, you can negotiate properties, zero money down. I have had exactly 0% success getting deals with no money down.
I was never able to do that.
Yeah. So yeah, fundraising is definitely a skill that is super important, and it is a skill. It's not something you think it's something you just go out there, you ask people, and money comes to you. But it's something that you need to build a pipeline, you need to build credibility, and it's more difficult than it seems. So good recommendation. With that said, I'm going to move us on to the next question. This is about the U.S. It is a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Single metro I'm most excited about. I have to say it's the Boise, Idaho area. We recently started working on that, on a new project out there. It's in that major metropolitan area. We're not actually in the city, but I see huge growth out there. Real estate values are fairly affordable, and the area is experiencing a ton of growth. So I'm very excited about that market.
Interesting. You are also the only person to say Boise, so that's cool. Boise's gorgeous. I love Boise. So, and I know they have had great growth out there. So interesting to say. All right, next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what's your favorite way to generate leads and find new deals?
My favorite lead generation tool has been LinkedIn recently. That's where we produce the most content and where we are being discovered the most. I like that because I get to talk to more or less professional group of audience out there compared to other social media that's very much diverse, from like little kids to grandparents, and there's just too concentration. LinkedIn is more of a professional environment, so I like that. So that's been our favorite tool. And my message is that we're trying to convince sellers to not sell. My motto is do not sell your land, develop it. And so that's what I've been telling people. Look, if you've got a piece of land and you want to sell it, my first question is, what are you going to do with the money? And if your answer is you're going to reinvest it in real estate, well, then just double down and reinvest it into your own property and grow the value there.
Makes a lot of sense. You are also the first person to say LinkedIn. So that's 3 for 3 right there. I'm impressed.
Hey, well, what do I get?
I'll have to think about that one. But yeah, LinkedIn is it's my favorite social media platform. I'm really not big on social media, even though it's a big part of running a podcast and shooting it all out there. But I don't use it myself. But LinkedIn is definitely the one that I do use, just because I feel like the content. I mean, if business is your thing, it's more business oriented, and you get a lot of good ideas there. And so that's makes a lot of sense.
For sure.
All right, next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times, if not every time, something goes wrong. And that's when we get to learn a lesson. So what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
The worst experience that I had by far was losing a deal to foreclosure. So that was something that looked great on paper, something that we came up with this pretty unique way to finance it, and everything looked great on paper until it didn't. The market changed. We signed that deal in 2021. Well, the first iteration of the deal, the partnership introduction was 2019, 2020. We started construction February of 2020, right before COVID hit. We refinanced that deal in 2021. In 2021, we created this super complex structure where we merged two projects together, two buildings together into one project. We set up ground lease financing, and then everything collapsed from there. We were not able to recover. So that was painful. That took us some time to recover. The dust hasn't settled yet on the challenges that we experienced there. But that was probably the worst thing. And the biggest lesson that I learned is if you have to complicate it so much to get the deal done, then it's better to just take a step back.
Yeah. And that's a hard lesson to learn too, especially when you put a lot of time into the deal. You've done underwriting, you've gone out there, you've put, your feet on the ground. You've been talking with this seller for however long you've been talking with them. Sometimes it's years that you've been talking to these people. So this deal is like ingrained in your mind and you just want to get it done. And getting to that, having gone through that, getting into that emotional space and then realizing, shit, this is actually not a good deal. It's not a slam dunk like I need. And realizing that you need to back away from it, that is such a difficult thing to do. And it's something that everybody struggles with. So I totally understand that. But not every deal is like that. Some deals are slam dunks and they just go the way you expect it. So take us to one of those deals. What was a deal that just went right and everything, the stars aligned and you kind of rode off into the sunset?
So a few years ago, we developed this townhome community over in Bellevue here, and we almost didn't take that deal. It was complicated. It had it was right next to the creek, so it had wetlands issue, setbacks. It had poor soils. It was just a difficult site. The seller wanted, that was the deal that we actually ended up buying. The seller wanted too much money. Nothing could pencil there. We ended up negotiating with the city on buffer mitigation. We were able to reduce the buffer from the creek to increase the buildable space. We built 12 beautiful townhomes. They were the most expensive townhomes at the time on Bell Red Road in Bellevue. We, all the realtors kept telling us, lower the price. And we're like, no, this is it. So we ended up pre-selling all of them within 2 or 3 months. We had a pretty unique, creative financing structure there as well, and it just worked out. We got them delivered, and construction did take a little bit longer due to the soils issue and various other variables, but that was definitely one of the most rewarding projects at the time.
Nice. I love it. Was there anything in particular during that deal that you feel like you did differently that really, led to the good result? Or was it, you really just, you got into a good piece of land that worked out well?
Okay. So we were never planning on buying anything. I got a call from a broker friend and said, hey, I've got this deal. Another client of mine is looking to buy this piece of land, but they have some challenges right now. Can you do me a favor? Can you just tie it up? And you'll have 4-month feasibility. And if you don't, want it or whatever, if they don't want to take over, then you'll just, cancel it. And I'm like, listen, I don't really do that. He's like, please just do me a favor. Like, no pressure. You don't have to look at it. Don't worry about it. I'm like, okay, fine. So we tied it up. We signed the purchase and sale agreement without really honestly having any intent of buying it. And I hate admitting that, but truth is truth. I haven't done it since. I hate tying up properties just for the sake of tying them up. 3 months go by and I put it on my calendar so that I don't forget to waive contingency or to, not waive contingency, I guess, decline the purchase. I call up my broker friend and I said, hey, well, the 3 month is coming to an end. Is your other buyer going through with this or not? Like, do we need to assign it? He's like, no, they just told me that they're not in a position to acquire it. So just, don't worry about it. And then we said, okay, fine. And then he calls me back. He's like, wait, but do you want to even take a look at it? He's like, it's still a great piece of property. I'm like, look, I'm not really looking to buy anything right now, but fine, let me do some digging around. I looked at the property. It was a beautiful piece of property. Nothing like the area was growing. I don't know how much you know about Bellevue, but that's before they opened the light rail. Like there was a lot of like that Bellred corridor was exploding with Spring District and everything. Meta has since moved into Spring District offices. So huge growth there. I looked at it and I'm like, the price is just not right. Like I can't pencil anything. So I called my broker back and I said, can your seller reduce the price? Because I can't get it to pencil. He's like, yeah, just counter. We countered, extended feasibility by 2 more months. I think they wanted originally something around $3 million. I said, I can't get anything to pencil for more than 125. And they agreed. And I'm like, I can't believe I just got it for less than half. But they agreed. We met with the city. We said, look, there's very little that we can do here because of that creek, because of the buffers. But the city worked with us, and we were able to mitigate the buffer. We were able to build a little private park there. And just the way that worked out, that we were able to negotiate that acquisition, the way we were able to work with the city to increase the density there and deliver, this good-looking product. We're super proud of that.
Yeah. And the lesson there is always offer, it doesn't matter what the listing price is, just put the offer out there that works for you, that works for both parties. We actually just had a similar thing. It was, there was an RV park listed for 1.5. We offered 750. We got 750. But that's just because it made sense at 750, and 1.5, nobody was going to buy it. It wasn't that was a completely ridiculous price. Right. And so, yeah, if a property is off or listed at a certain price, that does not mean that is the value of the property. It just means that's the number that they put out there. Right. So yeah, I love that worked out for you guys, which leads us to our last question. And this is for the listeners. You've given us a lot to think about, and I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
So I'm on most social media, primarily LinkedIn. Look me up, Eugene Gershman. I think I'm the only one there. But please connect. I respond to everybody. I talk to everybody. You can schedule a time to talk to me from LinkedIn, or look me up on our website, giscompanies.co. No M there. We have lots of tools there. We have a free feasibility study checklist that you can download. And if you want to do feasibility study of your own property, go ahead and download the checklist. Just follow the prompts and get it done. And if you need my help, I'm happy to help.
Perfect. I will put that link in the show notes. So if you guys want to reach out to Eugene, just click the little more, the description. It'll pull down that full description in there. You can find his link. All right, man, that wraps it up. Thank you very much for hopping on the show.
Thank you, Gabe. It's been a pleasure.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.